is the P. Diddy remix of today's live broadcast because I could not leave the secured entrepreneur community hanging with that last live video. OMG. Most of you know I am in a mountainous location and sometimes we don't have the right internet. My allergies started acting up. I was losing my voice. So we're going to do it right. Today, I am answering Jasmine's question, and she is inquiring about real estate investment trusts. And she emailed asking Jessica about how it is she should go about investing in these real estate investment trusts. What would be the correct way of doing that so that she doesn't make the investments in her name? And she asked about the different types and how she should just really go about doing it. So I said, you know what? We've gotten so many inquiries about real estate investment trusts that I have to come on and just explain them, okay? And I want you all to know that I do not have a license, so I will not be giving you any type of investment advice. You all know that I am Aurorah Dey for the Secured Entrepreneur Movement. Are you ready? Are you ready? Let's get it. Let's get it. Okay. So Jasmine was asking, should she be investing in real estate investment trusts, seeing as she is trying to be a real estate investor. However, she does not have all of the resources that she needs to actually start making investments in real property. Okay, she wants some. She said she wanted to do some single family and some duplex, things of this nature, but she doesn't really have all of the resources to do that right now. And I know that many of you here in the secured entrepreneur community, that is your endeavor. Your endeavor is to invest in real estate, but you do not have your businesses set up correctly right now. You do not have the proper business credit to come up on some of these resources. So yes, and yes, I'm saying yes to real estate investment trusts. Why? First of all, it does not take a whole lot of money to start investing in real estate investment trusts. Also, I think it's an excellent idea simply because you want to start creating some residual income for yourself while you are building your businesses, okay? So I'm going to break down the 4 types of real estate investment trusts so that you are fully aware when you come out here and you start investigating and you start looking at these ETFs, you start looking at some of the, some of these companies on the stock exchanges, okay? Because you can buy real estate investment trusts through a broker, of course, okay? You can go online and get some mutual funds, because we do have real estate investment trust mutual funds, and we do have real estate investment trust ETFs, okay? So the first real estate investment trust that I'm going to talk about right now is our equity real estate investment trust. So these are real estate investment companies that invest in residential property, commercial properties, hospitality properties, complexes, a whole slew of real estate. And the beauty behind these real estate investment trusts and how you come up, how you catch the wind, is that they are required by law to give 90% of their taxable income to the shareholders as a dividend annually. Okay, this is why real estate investment trusts are so attractive to investors, and they are very attractive to entrepreneurs such as myself because they are not howdy. Howdy, thank you for joining me, Maximilian. Okay, so we're talking about real estate investment trust today, and the first one was the equity real estate investment trust. And as I stated, these are real estate companies that own a plethora, a large portfolio of real estate. And once you invest in these companies, they are required to pay you 90% of their taxable income annually, all right? And the second I'm going to talk about, let's see, we have mortgage real estate investment trusts. So these mortgage real estate investment trusts consist of real estate investment companies that finance income producing real estate and mortgage-backed securities. Okay. And so what's happening is that when you invest with these real estate investment trust companies, okay, you are also getting in on the income that they're getting by producing these mortgages for these properties and buying these mortgage backed securities. All right, once again, 90% of the taxable income, all right, is being handed to you as a dividend because you are a shareholder in that real estate investment trust company. All right, and I'm going to go back to the equity because I know I'm going to get this question. The equity real estate investment trust, they are earning their income because they are collecting rents. These are contractual rents that they are collecting from all of the real estate. Okay, people are renting office buildings every day. People are renting homes. People are renting apartments and apartment complexes. And all of the rent that they are collecting as taxable income comes to the shareholder, 90%, as I stated, as a dividend annually. All right, so that was the equity. And we talked about the mortgage real estate investment trust. So the third would be the private real estate investment trust. Now, Jasmine, you asked about this one, and the reason why people are telling you, it's not the safest bet. It's not the safest bet because private real estate investment trusts are not monitored, tracked or traced the way equity and mortgage real estate investment trusts are, because private real estate investment trusts are not traded on any stock exchange. So you really can't do the proper research that you would need to do as it relates to their 52-week average. You're not really sure about the management of the company. You cannot get the information that you would get about a real estate investment trust company, like a mortgage real estate investment trust company and an equity real estate investment trust company, because those two are registered with the Securities Exchange Commission. Okay, so you can get all of the information that you need about that company, about what's been going on with that company annually. You can get their annual report, anything that you need to know to make an informed decision. You can do that with mortgage and equity real estate investment trust companies, but you cannot do that with private real estate investment trust companies because they are not registered with the Securities Exchange Commission. So it's kind of like anything goes. Also, with the mortgage real estate investment trust company, along with the equity real estate investment trust company, when you go with the brokerage, there are no commissions. You would not pay any commissions on those, but the private real estate investment trust companies, you would pay, commissions on that. So it's not very attractive. And then the last would be the public non-listed real estate investment trust company. So what that means is that they are registered with the Securities Exchange Commission. However, they are not traded on any stock exchange. Okay, however, because they are listed, they are registered with the Securities Exchange Commission, you will be able to do your due diligence as it relates to finding out how much money you can make on an annual basis, and how much the shares are, things of that nature. Okay, now once again, as I told you all, I'm not licensed to sell real estate investment trust. Okay, I don't have a series 6, 7 and all this stuff like that, so I cannot give you any advice, and I can't really even tell you how I actually make investments, because then the haters come out for Miss Aurorah. So we're not going to do that. But I just wanted to make it very clear that real estate investment trusts, are a very good thing for entrepreneurs when you're trying to build your business, because you are guaranteed 90% of these real estate investment trust companies, they have to give out, okay, annually as a dividend. So you're always going to come up, especially, once again, do the research. All right, that's what Miss Aurorah would tell you to do. Okay, because it's not advice. All right, so you all know that. Oh, here's the other thing that Jasmine was concerned about, because she has been watching us, okay, and she understands what we're saying about making the investments the secured way. Now, I would say to all of the secured entrepreneurs here in the community, as I said to Jasmine, no, I would not make any type of, like, I'm not going on to Robinhood and things like that. No, no, no disrespect to Robinhood or anything like that. Okay, because I also use the platform, but I'm not using my personal bank accounts, to make investments. I'm not creating any taxable events for myself, because you know what we teach here, tax-free wealth that is available to anyone and everyone who chooses to participate in commerce. Okay, so that means that you have to have the properly structured entity that you will use to make these investments. Okay, so Jasmine XXX would not hire a broker and start making these investments, but maybe a company that Jasmine owns would actually begin to make these investments. And that is the proper way to come out here and make investments, so that your wealth is secured. And no one wants to give away half, or whatever percentage, wherever you are, okay, of your profit to the Internal Revenue Service. And they still love us. Okay, so that's what Miss Aurorah wanted to share today. And you know that you can get your complimentary consultation with a team member. The link is going to be down below if you're here. Okay, wait. Don't forget to explain how to use a Nevada or Wyoming corporate service entity in your tax structure. Okay, wait a moment, Maximilian. Now, you know that we have a lot of people in our community that really haven't come that far, all right? Now, I'm going to tell you this, Maximilian, there are no benefits in Wyoming. Now, Wyoming just happened to be one of the first states that embraced limited liability companies, okay, after Germany, okay? So Wyoming happened to be the original state that allowed us to have what they call a, what do you call it, like a, oh, it's going to come to me in a moment, Maximilian, but it's like a GMO of a corporate status, which is why the LLC is not federally recognized. The LLC can only go by a state statute, which is why the Internal Revenue Service tells us that we don't know what to do with you unless you tell us what to do with you. So this is why they ask us to either state, listen, I want to be taxed as a corporation. So now I'm going to fill out a form for that. Or I want to be taxed as an S corporation. And now I'm going to fill out a form for that. Until you tell us, meaning the Internal Revenue Service, how it is you want us to treat you, we don't know. So that means that you can have this entity, and you can have an entity that's really not properly structured, because you're not aware that we're going to view you as one. And then if you're making any money, well, we're going to hand you over to people who are going to say, well, we can just file a 1040, and you can put all the profits from your company on this 1040, and you can pay, X amount of dollars in tax. See the trickery, okay? So you want to be in a state that actually has the privacy enactments, okay? That does not happen in Wyoming. You still have to give them an annual report about your business, okay? Also in Nevada, we have certain rules in Nevada as well. It's not really the privacy state for, this is the word, hybrid. The LLC is a hybrid of a corporation, okay? So Wyoming just happens to be the first state that allowed us to have it. And then everybody else followed with different state statutes, because it never became federally recognized. And then, of course, Nevada has some things for corporations, not really that LLC as it relates to privacy, okay? So I want you to be clear on that, Maximilian. So, what we teach secured entrepreneurs here is that if in fact you are using the hybrid, which is a LLC, you want to be properly structured in that you don't want to be a single member LLC. You may want to be a manager. Well said. Thank you, Maximilian. You may want to be a manager managed LLC. Okay, because remember, the name of the game is to own nothing but to control everything. okay, and to not create taxable events for yourself, okay? So, Maximilian, click the link below and get your consultation so that we can discuss that, because I feel like you got some stuff going on. True. That's all right. That's what Miss Aurorah wanted to share with the Secure Entrepreneur community today. And you all know that you can continue to email Jessica at info@AurorahDayConsulting.com. And you can reach me here, YouTube Aurorah Dey, Facebook Aurorah Dey Consulting, OM to the G. 855-276-2115. Get your consultation. Let's see if we can move to a strategy session. 2019, we're going to do it big. Millionaire Secret Strategies.club. Thank you, Maximilian, for joining me on this evening, this afternoon, this morning, whatever time you're catching this broadcast. All the links are going to be on the bottom in the info box. If you're here on Facebook, they're going to be above. Okay? Enjoy your holidays. Thank you, Maximilian. Enjoy yours too. I'm going to try to come back tomorrow. I'm going to answer some of these questions. Ta-ta.